So, all right. Hey, good to see you. Nice, nice, nice. We have a pretty nice representation today, I think. All the way from the West Coast and all the way as far east as you can go. I did hear somebody from Japan. We've got Midwest represented here. We've got the UK. I see some UK faces. I see the East Coast. Atlanta is obviously well represented. And thanks for joining. Thanks for joining, guys. Oh, and the DMV as well. Yes. Yes. How about that? Never forget the DMV. So, welcome everyone. Saturdays with Eddie. I am Eddie, and this is your program, not mine. This is for you guys. Obviously, I am, thrilled to be here. The reason I do this is because I love options. Options is what I do on a daily basis. If I catch myself buying a stock, it's because it's a long-term strategy. But I do buy stocks, shares, but not too often. So this is mostly for options. Obviously, with options, you can leverage, right? You can leverage, and let's see. Anybody have a good story to tell us? What happened this week, last couple of weeks? Anything? Anybody have an opinion? Anybody want to share anything? Say hello.
Hi, Eddie. It's
Hey,
A.
hey,
I have
how's
a
it going?
question.
Yes.
I was in a trade. I'm still in it, a
Okay.
live trade. And I set my buyback for like 15 cents. It hit it like three
Okay.
different times, but it never got me out.
Yeah.
I'm just
Okay.
wondering, should I change it? Should I up it? Or what should I do?
Well, based on the price, it sounds like that was a credit spread that you're trying to buy back. Is that right?
Yes.
Okay. Uh, what's the symbol?
It was SPX.
Okay.
And it hit the mark. My buyback was 15 cents. It hit it like three, four different times. I knew it was going to get me out. It didn't get
Yeah.
me out.
Well, bump it up to like 20 cents.
I was hoping you wouldn't say that.
No, no, no. Bump it up to, what's 5 cents between friends?
Okay, Eddie.
Yeah. Yeah. You want you
Okay.
you want to risk 5 cents?
Well, I want to get out. I want to cash out, so I'll do it.
Can you do it again 3 times next week?
Once I get out of this one, yeah, I'm gonna jump back in.
Give them the 5 cents.
Okay.
Yeah. Yeah, don't sweat it. Because you can do it many times over, right?
Yeah, I just didn't understand. It hit it like three, four times to 15 cents, but it just
Uh,
wouldn't cash me out.
yeah, there are many reasons for that. I've seen that. I've put in a buyback order for 10 cents. I've even seen it go all the way to 7 cents, and nobody's buying it.
Yeah,
So,
yeah.
yeah, it happens. Remember, you're trying to throw away a bad apple. That's what you're trying to throw away, right?
Mhm.
Yeah. So whoever's buying it on the other side needs to be. They have to have some sort of strategy, and if it's not expiring today, then why would they do it?
It's not. It's not.
Exactly.
Okay.
So if it was zero DTE, that would be strange that you're not picked up. But now that you mentioned that it's actually not zero DTE, it's not expiring. It hasn't. When does it expire?
Later in June.
Ah, yeah. Nobody's gonna buy it from you that low. That's
I'll
one of
bump
the
it up.
issues. Yeah, that's one of the issues of credit spreads when you sell them too far in advance and you're trying to buy them back at a throwaway price, then it's really hard. But zero DTE, just yeah. But sounds like you're in a really good spot. So I'd hang on to it. 15, 20 cents, and if you can get rid of it for 20 cents, that's cool. How much did you sell it for?
I think it was about 65 cents.
Oh, okay. Yeah,
Yeah, I'll try 20 on Monday.
got it. So yeah, you'd be making about 45 cents. Cool. All right. I think we have a few more people in here. So we are going to be all over the place today, but we'll start with some. My plan, what I have written down here, is to go over some fundamentals, and then we'll kind of do some mid-range things, and we'll also hit some advanced stuff and some questions. How does that sound? Sounds good. So let's see in a poll who is new to options, who is struggling with options, who does not know how to spell options. Let's start there. Those are the people that I want to see. So I am new. Okay, Olga says she's new, and she's new to this group. I know. Are you new to options? Okay. Jamise is also new to options. All right. All right. Anybody else new to options? All right. All of you are professionals in options. Wami is struggling, new to options. Okay. So all of you are really, really good at options. Garin, fairly new. All right. All right, let me see what I can do for you guys. I think I've got something not new, but still learning to master. Okay. All right.
Good morning, Eddie. This is Jaren.
Hey, Jared, how you doing?
I'm doing well, thank you. Good to see you today. Good day, everyone. So I'm fairly new to options by way of an older program. I think I told
Okay.
you that.
Yep.
I have a question. If you talk about that particular subject during these calls, is how you pick your prices that you want to get in and out of options
Yep.
positions.
We're definitely going to
Within the
hit.
span of
Your question is how to pick the strikes when you want to get into an options trade, right?
Yes.
Yeah. Okay.
Thank you.
How to pick it. We'll definitely do that. That's important because if you're new to options and you don't know what strike price to pick, I think you just stick with fishing, right? So
Yeah, I've been doing some fishing as I've
there we
been
go.
learning. So, and I don't particularly like fishing, so I like to be a little
I
better.
know, right? Fishing, there's messy, there's water, then you have to scale the fish. Sometimes you have to throw it back in. I
Yep,
always
I just
wondered.
like the finished product. Just let me fry it up and go from there.
All right. So for those, let's do a pop quiz. For those of you who know options, what's the simplest strategy to take advantage of rising prices? Anybody have an idea? Anybody know how to? What's a simpler strategy that we can use?
Buy a call.
Buy a call. I like.
Buy a call.
Buy a call. All right. And if you know the answer, don't blurt it out. I want those people who say they know how to play options. Tell me. All right. So, but I like that answer. Buy a call. So yeah, that's if you're expecting prices to go up, you buy a call. If you're expecting prices to go down, you buy a put. Right? It's as simple as that. So I'm just trying to gauge some numbers here. Anybody have an idea what Vega here represents?
Volatility
Okay, of what?
of the market. It is, I don't know how to describe it. When the volatility is higher, then you've got more fear in the market.
Mm-hmm. Does it affect any of the delta?
The delta, the premium prices it affects.
Mm-hmm.
I'm not sure about the delta. No.
Okay.
But
All
the
right.
premium prices are more expensive when the volatility is high.
Nice, nice, nice. All right. Yep. So Vega is that metric, is that Greek that actually measures volatility of a particular stock relative to the market. There are several inputs into it, but essentially when Vega spikes, Delta also spikes, which means that your premium is also going to increase. So if you're doing a simple calculation of, say, you buy something at the money, let's say you buy something at the money that has a delta of 50, you're fully expecting that for every increase in $1 in the premium, every increase of $1 in the price of the underlying, then the premium should go up by the amount of delta. So we're expecting it to go up by around 50 cents. But if you have a sudden spike in a Vega, it means that that delta can shoot up to maybe 67, 70 cents, give or take. So you might even realize your profit a lot faster. It doesn't have to move a whole dollar. So today I want to actually show you guys a trick into how you can get your trades filled even faster without having to put in a specific premium price. So that's one of the tricks I want to show you guys, and that's why I'm asking about Delta. So this is for guys who and gals who trade options. Let me think of another question here that I can. For those who are not, let's get some struggling questions here. What are you struggling about? What is it that about options that you don't understand? I'm trying to find a place to go to start full with the fundamentals rather than just jump into strategy and that kind of stuff. Where are you struggling? What's happening?
Okay, I can go first.
Sure.
When I buy a call, I am lost when we discuss the break-even point and should I wait for it to expire? Should I sell before then? And then with the current momentum, it keeps on moving up and down. I panic.
Got it. So you get into an options contract, you buy it with a certain expiration date. Let's say it expires 2 months from today.
Yep.
Right. And your question is, should you wait 2 months to sell it, or can you sell it 1 week? After 1 week, can you sell it later on in the day if you're making money?
Yes.
Is that your question?
Yes, that's my question.
That's your question, right? So first and foremost, do you know when you're making money?
If the if the price of the regular stocks moves up, then I should also be making money.
You should also be making that. So keyword there is should, but are you
Yeah.
making money? How do you know you're making money in the first place? Where do you go to check?
It keeps on.
Actually, let's go back maybe one step. Are you using Thinkorswim? Are you using TradeStation? Are you using Webull? What are you using?
Oh, interactive brokers.
Interactive brokers. Okay. You got me on that one now. So IB. So you're not in the US, is that right?
No, I'm not.
Okay, so you don't have the options to go to another broker. All right, so with IB, you can still get your. Let me bring up my IB here. You can still go into your profile, or actually, what's that place you go to figure out what your position is? So once you go into your position, you can see whether it's green or red anyway. Yeah.
Yes, I can.
Okay, so you know you're making money.
Yeah.
The question here is, should you get out or not? First, it would go back to your plan as to how much were you expecting to make. Do you know how much? Do you have such a plan?
For example, maybe assume 300.
Okay. All right. It should Well, we'll assume 300, but it should not be an assumption. What I'm trying to guide you here is that as you enter the trade, you should have a plan for where you're going to get out, or after you've made a certain amount of money, how you're going to get out. So there's a whole plan that we need to talk about. But I'll answer your question real quick. Short answer is no, you do not have to wait 2 months to sell or to get out of the position, right? So if you enter a position in the morning, say at 10 o'clock in the morning, and by 10:15 your position has increased by, using your example, $300, then it is time to get out of that position if that was your goal, right? So everything is goal based, meaning that you have to have a very, very specific goal. If you don't have a goal, you're going to hit it every single time. Oh, that was pretty good. Yikes. Yeah, I'm going to have to remember that one. Okay. So, yeah, you got to have a goal. And then, get out when you get to it. So, yeah. Yeah, there's more detail. So, and I think I have a meeting coming up with you sometime. So we'll talk about that in more specific detail. Any other areas that you're struggling that you want to talk about, or you want someone else to go?
Someone else can go.
All right, cool.
Thank you.
You're welcome. All right, everybody else sounds like the no options, right? Is that right?
I have a quick question.
Yeah.
I'm learning TD Ameritrade,
Okay.
and I place a couple orders in there. My struggle is when I look at the platform, I can't really figure out when I'm making money, like you're saying, because the PL day and then PL is another PL down there.
So you've got PL day, PL open, all of those. You're trying to figure out which one is the right one to consider, right?
Right.
Okay, that's a fair question. Very, very common question. The answer to that is, when you're looking at PL day, that tells you how much profit or loss you have made on that particular day for that particular security. It is for today only, right? Ever since you got into the trade. If you're looking at PL year to date, guess what that is?
How much you made since you got into the trade?
Exactly, year to date. So whether you're in a position or not, it's just telling you that for this particular symbol, since January 1 of 2022, you have made X amount of dollars, or you have lost X amount of dollars. The way that you know whether you've made money or lost money is if there's a parenthesis around it. That means it's a negative number. In Thinkorswim, those numbers are not red. They just put parentheses around them, or brackets. Yeah, I guess you could call them brackets. So that's how you know it. I'm trying to bring up my on demand here so that we can actually see that. So, and then PL open is the one that I haven't mentioned. So PL open is if you have an open position, that number should be positive, hopefully, right? But if you're losing money, there's going to be the parenthesis around it. Yeah. So that's how you know whether you're making money or not. I'm waiting for this other system to load here. Today's what date? Today's the 4th. June 4th. Market was open on Wednesday. Is that right? Yep, let's go. Yeah, I'm just setting my system up here. Give me a couple of seconds here.
Mm-hmm. And also while you're there, if you can show how to put in a bracket order, like the lady earlier was saying how she wanted 50 cents of the trades. Usually, well, I won't say usually because I just started it like maybe a couple of weeks ago. Because I don't know, I just let it run with no stop loss or anything like that. So that I know it could be dangerous. I just don't know how to execute that in Thinkorswim.
Understood. All right.
Thank you.
So we're looking at a live trade here. If you see if you're watching my screen here, the on demand, and hopefully you can all see my screen. What do you guys see on my screen? What can you see?
SPS chat.
Are you looking at my on demand?
Yeah, SPS.
Yeah.
SPX on demand. All right, good deal. And today, June 3rd, is what's playing so far. So we're just going to do an arbitrary trade here. I have not plotted this chart to see where this stock is going, and I'm just going to assume here that it's in the third 15-minute candle. Direction on this trade on this day looks like it opened downwards, and it looks like it's going to try and cover that gap. That is I think that's the idea for that particular date over there. June 3rd. Let me just verify that. Maybe not. Okay, so we could see. Just to answer your question, I want to do it live here. So what you would have done is gone on to your options chain here, and we'll talk about what is the right date to pick over here. For now, we're just going to go with the 4th June, and let's assume here that and I'm going to go down to the 5 minutes just to see that what's happening. All right, don't know what's going on, so we're just going to pick a call and buy single, right? Nothing fancy. I just bought a call, got filled at 17.35. Your question is, how do you know whether you're making money or not? And in Thinkorswim, the way you figure that out is you go over to your monitor tab, right? Do you see that monitor tab right here? And under the equities and equity options, notice that I've got the instrument that I'm trading. Right now it says it's in the money. That's what that ITM means. My PL open, this is where your question is right now, is negative $40. See that? Now it's negative $5. How do I know it's negative? It's because it's got this parenthesis around it. That's how I know that I'm losing by $5 or 20. PL year to date tells me ever since I started trading these since the beginning of the year, how much has it gone up or down. So obviously this will always be changing. And then there's one other one that I can add here, which is PL day. So PL day, and you can configure your system to do that. So PL day as of today, so far I have well, my PL open is equivalent to the PL day, right? Let's say I want to lose these $50, right? I want to lose this $50 just so that I can show you this example. So I'm going to right click, create a closing order. 1670 is how much I'm going to sell it for. Hang on a second. How much do I know? By the way, how much did I get filled for? I paid 1735. So question there for you, Kelly. If I sell it for less than 1735, will I make a profit or not?
If you sell it for more, then you make money, yes.
Yeah, but if I sell it for less, I'll be losing money, right?
Right.
Okay, so I am going to lose some money over here, about $30. I actually want to lose on this one. So I'm going to sell it for, actually I wanted to sell it for a lot less. But let's go ahead and lock that price in, 1710. All right, I just got sold for 1720, so I know that I actually lost some money. I'm doing this deliberately. So notice now that my PL for today is $15. You see that? My PL open has now dropped to 0, meaning that there is nothing, there's no activity going on at this particular moment. My year to date has now been locked in at $15. You with me so far?
Yes, sir.
So this transaction after tomorrow is not going to show up over here. After tomorrow or after today, it is going to show up in the account statement, right? Under the cash and sweep. So this is on-demand feature. It does not have the cash and sweep enabled, or maybe it does. Maybe it up to June 3. From June to June 3. Well, it should show us that numbers, but I think the on-demand feature does not have that. So
Today is June 4th, and that was selected through June 3rd.
It's 2021 on your, it says 2021.
Never mind.
on my on-demand, it is June 3, right? Yep. So the on-demand feature does not show the cash and sweep. I'm fairly positive on that, but the paper trading and the live will definitely have that. So after today, after this date over here, then it is going to show up. So let's do the same transaction again and see how these numbers change. So I'm going to go back to trade. First, I'm going to see what's happening. It looks like we're still trying to go up here. I'm going to do another call. Right?
Can I ask a quick question? Are you actually like buying it on the same day and selling it on the same day?
Yeah.
Oh, okay. I see.
Mm-hmm. Yep. Just for this example. So I'm going to go ahead and buy another one here. Actually, it's going to be the same one. And it got filled at 14.5. That was the 41.85 call at 14.50. And let's see what's happening now on the monitor screen. So you can see now my PL open here is 0. It's fluctuating. It's going up and down. But if I expand this SPX symbol, because it's the same instrument, I can now see the second call, which I just bought. The very first one is closed. And the PL open, that one's not moving. Those numbers are not going to change, these two numbers. But on the second one, this one is still open. I am now down $60, right? 95 now, it's going up and down. But for the full day, total down is 110. So do you see how to read that account statement?
Mm-hmm.
That is one of the most difficult, well, not difficult, but I want to say challenging for new traders trying to figure out where do they go find out, are they making any money or not making money. So if you're a numbers person, and you should be, if you're going to do any sorts of options trading or any trading whatsoever, you should know whether how to make money, how not to, or whether you're making money or not. That's an important skill to have if you're going to do any sort of trading, any business basically. Right? Nobody goes into business without understanding how they make money or how they lose money. This is, and that's why I'm spending a lot of time on this one. So far on this call, we're losing $100. Notice on the one that we had bought earlier, the 41.80 call, that one remains that. Does that help you understand that concept of where to go find whether you're making or not making money?
Yes, sir.
Oh, yeah.
I got it.
Awesome. And hopefully it helps somebody else as well. So, all right, good deal. So since this one is a loser, we don't want to keep it around. And by the way, when I entered this call, I did not enter with stop loss. That's bad, right?
Mm-hmm.
It's bad. I always teach how to enter with a stop loss. So let's go ahead and right click on this one, create closing order, and let's lose these $145. Stop the bleeding. It just got sold actually at 13.05, so that's good enough. Not bad. Yep, and it's starting going down over here. Let's see what other questions I had here. All right. right. All right. So how to find the strikes? This is another beginner question. So let's talk about. This is geared now towards the more of the fundamentals. So how do you, if you're new to options, there are a few things, quite a few things that you should know. So first and foremost, you should be familiar with plotting the chart, right? That's always where it starts. You always want to know where is the stock going, where's the particular instrument that you're trading, where is it going. So this is the very first part of it. And obviously for things to appear on your watch list, you should have picked something that what happened here, an expected order. No, continue. I don't want to restart. Yep. So yep. So you always want to start with the chart, right? Because this is what tells you whether you're going to enter the trade or not enter the trade. So I have a question here. Pop quiz. When do you enter the trade? In layman's terms, when price is what?
When it's in your buyer's level or your support level or your resistance level.
Buyer's level or support level, right? So the concept here that we're trying to bring out of our minds here is the buy low, sell high concept, right? So everybody knows that we buy low, we sell high, and the difference between those two is what you keep. That is your profit. Well, the question is, on a chart, where is the low and where is the high, right? So the low is going to be the support or the lowest point or the lowest price that you can get for that thing, and the high is where you're going to sell it. Is that simple enough? Is that complicated?
No, that's good.
Yeah, I think it's fair enough, right? So a lot of people might be entering in the middle of the zone. When you're entering in the middle of the zone, you're saying that you really don't know where the low is or where the high is. You're just trading just because you can. Bad strategy. So I would suggest that when you are plotting, and obviously this is not good when you have data like this. Okay, so when you're, is this date actually? Oh, this is June 2021. All right, that's cool. So when you're plotting your chart, always make sure that you're waiting for the lowest moment to buy it, or slightly slightly above the lowest moment. So this particular one, the price is 123, and as close as you can get to 122, that would be your low. And if you get into the trade at that particular moment, then your high would obviously be somewhere around, I would say you're looking for 127. Is that a good enough trade? In my book, not really, but in some people's books, that might be a good trade. For me, that's not a good trade. A good trade for me means that the expected movement from where I buy it to where it is going is at least $10, right? No less than $10. And there's a reason for that. There's a method to that madness. Anything that's moving less than that, in my book, is not really good. So that's number one. So once you've identified your stock, well, let's actually look for one that has a
$10 range.
Has a what range?
$10.
Yeah, $10. Yeah, $10 range. Yes.
Amazon is good, or Google, Tesla,
Yep.
one. CMG.
All right. Speak on that. And it could be that on this on demand that we don't have any. So that one is thinking. Well, that is thinking. Well, that's taking too long to think.
Yeah.
So move it to the side.
SPS is a little bit higher.
Mm-hmm. SPS also is good.
Yep. Let's do what is it? SPX. on paper trading. So I've switched over from on demand now to paper trading. Yeah, did you guys notice that? Yep. So now I'm on as close as I can get to live, and this is SPX. I'm looking at the daily. One thing I should have mentioned is that when you're plotting your chart, you should always plot on the daily time frame, right? Even though you can examine your charts on the 15, on the 5 minute, on the 1 minute, that should not be where you start off. You always want to start in the daily time frame. How do I know what time frame I'm on? If you notice on the left side of my top left, just follow my mouse. It says SPX 9M 1 day. That tells me that I'm looking at the 1 day chart on a 9-month basis. So from today's date, go back 9 months, possibly here, right? That's what that is telling me. So this is where you plot. Then once you determine the direction, then you can choose. I mean, that tells you whether it's going to go up or it's going to go down. I'm referring to the price of the underlying this time, right? It's going to go up or it's going to go down. This is today's or yesterday's candle here. Do we think this is going to go up or is it going to go down? What do we think? Anybody have an idea?
It look red.
Jaren thinks it's going to go down. Okay. All right.
Me too.
All right. I think it. Okay. Now we have a 50% up, 50% down. Deborah thinks up. Might hit resistance, then go down. Okay. I like that explanation. All right. Colleen is hopeful. Down. All right.
It is a
This is gonna be
seller's zone right there. So
yeah. Yeah. This is just my opinion. It is not qualified, right? Which is what I should have started with in the beginning and said, I am not a financial advisor, by the way. I can't tell you what to do, right? You all understand the blueprint. I mean, the fine print is this is for educational purposes only. So don't invest money you cannot lose or you don't want to lose, stuff like that. So I think this is probably going to go down. So the example I'm going to give is for put, because I think that we have hit resistance at that particular point and that we are heading down to support maybe at the 38.75. So I've got some math that I normally do, and I teach that, by the way, in Options with Eddie, about how to calculate what the expected movement is and how to increase your probability of success for a trade. But I want to go through the basics of how you decide what strike. First things that you do is, once you have identified where your particular price is and where you're going, the direction that is, then you have decided whether you're going to do a call or whether you're going to do a put. Earlier on, we said that the simplest way to take advantage of rising prices is to buy a call. The opposite of that, when you think that prices are going to be going down, then you buy a put. So call to go up, put to go down. SPX is one of the more expensive stocks, so don't be surprised at the options prices. And when we go to the options chain, we're now looking at we're looking at some really strange expiration dates. Why is that? I want to see all. Non-standard. It's quite interesting that I don't see all my expirations. So let's see whether that is a feature that is
I was just about to ask you that, because I look at my Thinkorswim and it did the same, and I was just wondering how to fix it.
Okay.
Like mine look like it's set with quarters, like every 3 months or something, and I don't know why.
Yep. I've got all the right things checked over here. So this might be because I wonder whether this is a sim feature, because when I look here at, I don't see all my expiration prices here, but when I go live,
It's okay in live. Live shows it all.
in live I can see all of them. So this is my live. I can see all my expiration dates, but in my paper trading I don't see that. So it might be just because today is Saturday, they're doing a lot of maintenance. Actually, when I logged in this morning, I noted there was a message there that they were undergoing maintenance. So good thing is that I can flip back and forth, but this is how it should look like, right? This is how it should look like. And if you wanted to fix this, then you can go to setup, application settings, click on display, and this should be checked, weeklies and quarterlies, minis, right? Those are the settings that define whether these show up or not. If I uncheck that and apply settings, notice that I've now hidden all the weekly expiration dates, and I'm now looking at the AM expiration. But if you just want a standard view, nothing hidden, make sure that your weeklies and quarterlies, non-standard options types, are displayed. Okay, that's it. When I go over to my paper trading, you know, I wanted to make sure, that's why I was looking for that settings, and it looks like it's already set, which means that it might be a sim issue. So let's do this on live. How about that? So the first thing that I want to do is, obviously I have done my calculations, calculated my expected movement, decided that the price of the underlying is either going up or down. Next thing I want to do is pick an expiration date, right? Pick an expiration date. My recommendation is 45 to 90 days. So if you're on SPX, you might, I don't know, your mileage is going to vary, but 45 days options on SPX is very expensive. So how do I know 45 days? See these numbers in parentheses? Those are the days to expiration. I'm describing the option chain, by the way. The first one is the date, right? In the DTE, that is the D is actually this number here in parentheses. So when we say to DTE, we are referring to this number here, to expiration. On Monday, this number is going to be 0 because it's going to be on 6th June. So if I'm looking for an option that is 45 to 90 days, then I'm looking for anything that has a number here, between 45 and 90. Looks like the 48, 55, 75, 76, all those numbers qualify. I would caution against using the ones that have AM. This means morning expiration. But let's pick a number here like 22 July. So that's the first thing that you do when you're choosing what strike. I haven't chosen the strike yet. First, I choose the date, right? So now that I've picked a date that is 45 to 90 days, the next thing is to pick the strike. That was the question, which strike? If you're looking at my screen here and the colors coming through your screen are the same as mine, you can see that this one section here is it has a purple background. Yeah. Let me see whether I can draw that. Do you notice that this has a purple background? Does that come through for everybody? Mm-hmm. Whatever shade it comes through, the one that I've highlighted is the one that we're paying attention to. If you're going to buy a call, then you want to pick something that is either at the money or slightly in the money. From a fundamentals standpoint, you might not understand that just yet, but let's define that and say anything that is in the money is going to be, the strike price is going to be lower than the current price, always, 100% of the time. So if the price is 41.08, then every strike that is below 41.08 is in the money. And that is true for when I look at this chain. Notice that 4100 is below 4108, 4090, 4080, and so on and so forth. So that's why all of these are shaded, and that's considered in the money or deep in the money, or when you talk about money nest. If we're considering a put, we also want to buy something that is at the money or slightly in the money. So let's consider now that we are going to buy a put. So the opposite is now true. Everything above 4108 in terms of the strike price is going to be in the money. Yeah, you with me so far? So everything over 4108 when we're considering a put is going to be in the money. So I'm going to change colors here, and I'm going to just paint that with a red rectangle. Again, that's the number that we're considering, 4108. So 4110 is above 4108, 4120, and so on and so forth, right? All of those are in the money. So we've decided that we're going to buy a put. So we have to select one of these, right? The question is which one? My recommendation is to always go at the money or slightly in the money. So I would go with a 4110. That would qualify to go in the money, or any one of these. That's qualification number one. Qualification number two is it needs to have a delta of at least 50, 0.50. By the way, when I say delta 50, I'm actually saying I'm referring to 0.50, right? Or 50%. So when I say delta 50, don't go looking for 50 and say, my goodness, everything here is less than 0.1. It's just a lingo, right? So when somebody says delta 52, they're actually referring to 0.52. That's what they're saying. So 4110 qualifies, yes or no? Does it have a delta of 50 at least? Not yet. So the very first one that has a delta of 50 would be this strike, the 4125, right? But it doesn't mean that the 4110 is not in the money. It's just that my rule is you need at least a delta 50. Well, question is 48, 49, 50. Is that a big deal? What's a couple cents between friends? And I say, not a big deal. The only big deal is it needs to be in the money. That's the minimum, at the money or slightly in the money. So any one of these that is in this, major red rectangle here is game for me. It's good enough, right? Don't get too hung up. Who was that asked the question? I forget who asked the question. But anyway, that was you. Awesome. And I can't see I don't see who's talking, so I'm just going to say,
It
cool.
was Darren who asked. I don't know if someone else did, but that was me asking which price. And,
okay. Got it.
And
Got
what
it.
you've described so far is what I've been doing, the simple method, keeping it simple.
Yep. You want to keep it simple. If you're not doing any sort of selling inside of a spread, then and you're just doing the single options, which is straight call or a straight put, then you know that you want to stick with the ask column, right? Ask column. ASK, ask, right? Whether you are on calls or whether you are on puts, you always want to stay in the ask column. I just drew some rectangles there for you guys to see the ask column. You're never ever going to be in the bid column when you're doing single calls or single puts. If you're on the think or swim platform, by the way, if you mouse over any of these, it should have a small tooltip, I guess. Let's see what it does. Yeah, you see, it's almost impossible to read, but you can see that white tooltip says buy. You see that?
Mm-hmm.
You do it on your own system, it's probably going to be a little bit bigger. And if you mouse over to the bid column, it says sell. We're not going to be selling, right? Sell. So that is where you hang out. So those are some fundamentals. When I'm teaching the options chain, I will usually go into quite a few of the these columns, the delta, gamma, theta, vega, but Since all of you indicated that you know quite a bit about options, I'm not going to go into that. So that's cool. I'm just going to stick with the delta column and the bid and the ask. Let's see, did I answer any other? See what I wrote that. So right now I'm just going through some fundamentals, and then we'll take some questions. Oh, bracket order. Somebody asked about a bracket order. How do you make a bracket order? Let's do a bracket order. How about that? So what they were referring to, and I'm going to pick a lesser expiration, by the way. If I wanted to go into, if I wanted to do a bracket order, let's say I'm going to go with something like SPY. SPY is a comfortable one, and I'm going to go 45 to 90 days. Would you say 22 July is a good one? Yes. All right, and based on what we have seen, we know that SPY runs, by the way, exactly like SPX. So we're going to buy a put, and we're going to buy it 45 to 90 days. So 22 July expiration. We're going to go at the money. All right, current price is $410.54. So anything above $410.54 is immediately in the money. So I am going to right click. Well, let's first go the simple way so that you know the difference. The simple way is to simply click on the asking price, right? 14.08. By the way, am I actually going to pay 14.08, or how much in real dollars am I going to pay?
1,400 and
Yeah,
$8.
1408, because you multiply by 100. And why are we doing that? It's because options are generally representing 100 shares. And you might ask, well, did you have to tell us that if it's always 100? Well, it didn't always used to be 100. And also, if you are now working with futures, then a futures options might not be 100. It might be 1,000, it might be 10,000. If you're buying gold and you're buying it in ounces, and you're buying oil, or buying it in bushels and stuff like that, or grain in bushels, then it's not always 100. So that's why they go to the labor of actually printing out how many shares are you controlling, and that's why that 100 is there. So $1,408 is how much you would be paying. So I'm going to click on it, and notice that immediately it gives me this order entry dialog. Tells me that I'm buying. It's a single spread, meaning that I'm just buying one straight call. It's buy. That's how I know it's buying. +1. This is important to pay attention to, right? If this were -1, I'd be selling, and this whole thing would now be red. So it's giving you the visual clues of what you're doing. So, kind of pay attention to what's happening. I like the visual clues to tell me what I'm doing. And then the expiration here is 22 July. The strike is 411. It's of a type put, right? What else could it be? Could be a call, and could also be, well, this will come up when we do a bracket order. And then the price, right? Is 1408 a good price?
No.
No, why
On
not?
the max. It is on the max side. It's like the most you pay for it.
Okay, so when I want to buy this and I want to put in a limit order, I'm saying that I don't want to pay more than 14.08 per contract. When I look down here, I see that the mid is 1403. Could I actually ask for the mid? I could ask for the mid, right? So I could ask for the mid, or I could ask for less, right? I could ask for less. Let's do some tricks over here. What if I actually wanted to buy these at $13? Is it possible?
Yeah.
Right. We started off at 14.08, right? I want you to watch this section here. Section I want you to watch is this one. Okay. Right now, expected SPY price is 410.33. Current price is 410.54, right? And I want you to watch that little section right there and see what it does. I want to reduce the price, my limit price. Does that start to change? Are you noticing the change down here?
Mm-hmm.
What I'm doing here is trying to see, maybe I want to get in when the price reaches $410, right? Because either I looked at the what is this called, the chart, and it is, I see this fluctuation, and I don't want to buy it at the very highest, or I don't, you know, buy it at the lowest. I want to make sure that I'm getting the best deal. In this particular instance here, I'm selling high, buying low. I'm selling when I'm buying the contract low when the price is high, and once the price of the underlying, that's confusing. The price, when I say price of the underlying, I'm referring to the 410. When I talking about the premium, I'm referring to the cost of the premium, the options contract. I don't want to confuse you there, so I'll not go back. I'll not to go into too much detail. But let's say I just wanted a plain $14. Lock that in. Notice this padlock. I'm saying don't give me any other price. I just want $14. That's the understanding. Then you can confirm and send. But if I push this padlock, let it, unlock it, then I'm telling the system, I know right now we are at 1408, but I'm willing to accept a lower price if you can get it for me. And that's why I'm going to leave these open, and then confirm and send. And that's why that is the natural price, because then it's going to try and get you as best of a price. Most likely you're going to be filled at the mid. That is my experience with Thinkorswim. Okay.
You're going to change
All
it
right.
to GTC, Eddie?
Yeah, we can do GTC. GTC here simply means the good till cancelled, and it means that if this order is not filled in today, the system will re-enter this particular order again tomorrow and every other day for up to 90 days. GTC is good for 90 days. If this order has not filled by tomorrow and today were a business day, do I still want it? The answer is no, right? Usually your orders should be based on what's happening today and your evaluation today. If it has not been filled by end of day today, you probably don't need it filled. Things have changed. So good point on that. Who was that? Somebody. Yeah. All right. So that's the simple way to do it. Well, what if I wanted to do a bracket order? That was the question somebody asked there. They want to do a bracket order, and let's explain what is a bracket order. A bracket order is it's an OCO order, right? Many ways that you can spell OCO. You can start with a first O, and that didn't come out. Order cancels order, or one cancels the other. Yeah, depending on how you landed, it could mean several things. But essentially,
That's what I said to you.
Right, but basically, a bracket order is three orders in one. The very first one is the order entry. You have to enter the order, the position itself, right? That's number one. Number two is you need a take profit order, right? In fact, I think in IBKR, they actually call it take profit, right? Your profit, no, they call it profit taker. Yeah. They don't call it a take profit. Call it a profit taker. Same thing. And then the third one is your risk management order. You always have to go in with the risk management. This is the way that I prefer. This is the way that I teach. I prefer that if you're going to buy something, then you need to protect yourself on the downside. So let's see. I'm actually going to do this on the paper. See whether I can get these. Yeah, let's do it on the paper trading because I don't want to click on my live and have this go through, mess up some stuff. So I'm on the paper trading. I pick 30 June, which is 26 days away from today. Understand, by the way, the reason I'm picking 26 is not because I will trade 26 DTE, but it's just for demonstration. Today, the Thinkorswim paper trading is not giving us all the expirations. On a regular day, you will see all those expirations. And we've just demonstrated that on the live section that is not a problem on live. So let's play with June 30, which is 26 DTE. At the money, currently 411. So we demonstrated how to go into the single order. We want to now do this as a bracket order. So if you simply right click on the number in the ask column, you click buy custom, and then you choose with OCO bracket. You see that? With OCO bracket. And this is the ensuing dialog. This is the default way that Thinkorswim is going to give it to you. Once you go into the OCO, notice that it will pull in the current price on that green line. It will attempt or suggest to give you $1 in profit. How do we know it's $1? It's because the difference between 1067 and 1167 is exactly what? $1. And it is going to protect you by $1. You see that? So this is what is called a bracket order. Now this is the standard way that you would do that. However, because we don't want to just target $1, we're going to put in our own price in there. And how you calculate that price is dependent on where you want to exit. A whole different class on that one. Whoever was asking about this, can you guide us? What would you calculate here to be your exit?
$1,000.
You want to make $1,000? Well, let's go with that. $1,000. So guide me. If I want to make $1,000 on this trade, what number would I put in here, Olga?
2067.
2067. How do we get to that?
Well,
how do we get to
10? If you add 1, you make 100. So if you 100 times 10, that make 1,000. So I don't know. That's how I figured that out.
Okay, all right. So 2067 would be you'd be making $1,000. So she is correct. If she wanted to make $1,000 on this one, then obviously, I need a few more days, right? I'm immediately going to switch these from day to GTC, by the way, because for this particular symbol, SPY, to move $10 in premium, what would the underlying have to move? So you're still on the spot here, Olga.
Yeah. Okay. So the underlying, I got to see the ATR, right? The ATR will
is
tell me how many
9.6.
days it would take to get there.
Well, ATR is currently 9.68.
So I guess in a good day, 2 days.
Okay, all right. The question is, in order for the premium to increase from 10 to 20, that is a $10 increase in premium, how much does the underlying need to move in the price in order for that to actually happen? You want to make $1,000 on this, right? So the current price of SPY is 411. At which price will SPY be at such that you will have made that 1,000?
421 something. 421.50. If it's at 410.54, you have to get to 420.54.
Okay. No.
Oh, yeah. 2 times that. Okay, so 430.54. Because it's with delta is yes.
Yeah,
Okay.
because the delta is 50, and how I got to that is she wants to make $1,000 on SPY, and so she bought the 411 strike, which has a delta of 50 cents at the moment, right? So for that delta to increase by 10, which is her target, then I need to do 10 divided by 0.50. Is that right? So 10 divided by 0.50 is 20, which means that SPY needs to move up $20 from 400 sorry, it needs to decrease. Let me correct you here. It needs to go down from 410 to $390. It needs to go up down here. Is that right? This is a put.
Mm-hmm.
Right, Olga?
Yes, sir.
Yeah. So if we're buying when the price of SPY is 410 and we're looking for $1,000, then we're saying that we're expecting the price is going to come all the way down to about 390.54, give or take. Right? $30, right? Or $20 movement. So $20 movement times the delta of 50 is what is going to give us 10, and that is her thesis. Now, do we always target that kind of a move? You can target that full movement, but it is unlikely that you will get it all in one day. You can probably get it in several days. I do agree, but what I would do is I would target about 60% of that.
Mm-hmm.
So let me pause here for a second and say that in my options with Eddie class, I do teach how to get a good trade, how to build a good trading plan for everything that you're trading. You're not just arbitrarily saying, I want to make $500, I want to make $1,000. You have to match that with reality and a good probability of success, so that when you put in a trade, you go in with absolute confidence
Okay.
that it is going to have a good a good expectancy, positive expectancy. So just arbitrarily picking 1,000, we pick that without a plan, even though the plan
Yes.
might come together, right? We pick that without a plan, and that may work some of the time, but if that's your MO, then that might not work to your advantage, especially when you're dealing with live money, you're dealing with a market that has whose primary business is to take your money. Then that would not be a good MO. For the kids in here, that is modus operandi. Michelle, how did I pull that one? Did that one come out fly?
All right, let me be reasonable. $300.
No, not reasonable. 300, no. We don't pick numbers like that. What we're going to do is we're going to plot the chart, see where it is going, right? And those are the numbers that we should use. So if you are at $410 and you have identified that your support level is actually at, in this particular case, I think it would be 386.94, 386. That is how we determine. So you always have to remember, I said you start with a chart, which is where we are, and then you calculate where you're going, and then take 60% of that, and that's your likely number, right? So I've got a whole formula for that to help people out in the class, but we'll go with your 300, right? We'll go with your 300. If we were to target 300 and we're buying at the money with a delta of 50, then the movement would be how many dollars, Olga?
Say it one more time, please.
You're targeting $300, right? And your delta is 50.
Right.
Yeah.
Okay, so if
So
the price is 410 and I'm targeting 300,
Yep.
so I wanted it to go down $6.
Yep, $6, correct. So $404 is about where you are, right?
Yeah.
Yep, 410 minus 6 would, and that's more realistic. You know, if we wanted to target that $300, then 404 is actually very, very realistic. Now you've got an idea that if you want to make that 300, you need a $6 movement to get your $3 in premium. Right? How are we getting $3 in premium? We're simply doing 300 divided by 50 to get $6. And then that tells us the movement of the price, 410 to 404. But the $3 is actually a derivative of 300 divided by 50, right? To tell us that we needed $6. So this may sound quite a bit complicated. I need to find simpler terms to describe this. But all right, so we want to make $3. So 13.67. Let me clear up some other confusion here for a lot of people who are new to options, because it's very confusing. At first, at least it was for me, that the thesis was that price is going down, right? Price is going down from 410 to 409 to 408, 407, and so on and so forth. Should my premium be increasing or decreasing? The only thing going down, yeah, the premium should be increasing. The only thing going down is the price of the underlying. Your premium should be increasing, and that is why this number is greater than 10.67, right? So this is an absolute number here. It's an absolute number here. How can we make this better? Remember I said I was going to show you a trick that you can get to your target much faster, right? Much faster. Here's the trick. If I break this chain link here, notice that I have a chain link over here that says toggle on link to do something. I now express this as a plus, positive or negative number. Notice that now my linkage here has changed, right? I now have a new parameter here, says TRG. TRG stands for trigger, right? What's going on now? Let's read this order again. I am still entering the trade at 411 strike. I am still buying it at $10.67. And even though I could manually calculate and say that please exit this trade when I reach 1367, I'm simply saying that go ahead and exit this trade when you have increased by $3 in premium, right? With a straight line calculation, $3 in premium suggests that we're going to go from the delta is going to increase by a straight line 50. When we opened the program, the talk, we started off by asking about Vega, and we identified that Vega affects delta. This is the point you want to pay attention to now. So if we have a spike in Vega, is it possible that this 411 strike could now have a delta greater than 50? And the answer is yes, which means that we can get to that 3 much faster than trying to lock in 13.67, right? So this is the way that I normally do it. I will usually use a trigger and I will let the system work for me as opposed to just blindly, locking in the price. I just want $3, right? So I'm telling it, give me $3. Same to my stop loss. I'm going to push that and say that I want to protect myself on the downside. If the price reduces by $1, it means that I will have lost $100 in real money. Then go ahead and exit the trade, which is the same thing as saying that if the price goes down to 9.67, then you go ahead and exit the price. The last thing I'm going to do here is unlock this padlock so that all these numbers are now relative. So notice that this relativity helps me because I don't have to recalculate these numbers. At whatever I get filled, I don't have to recalculate. So I'm going to go ahead and confirm and send so that we can see what's happening. And notice that I have 3 orders building up for me. Order number 1 is my buy. Order number 2 is my take profit. or if you're in interactive brokers, it is a profit taker, the same thing. And order number 3 is my stop loss, right? Is a stop loss a good idea, by the way?
Yes.
Rhetorical question, right? Is it optional?
No.
It is not optional. Not in my book. If you're going to do a trade, you want to protect yourself. Otherwise, you're telling the system or you're telling the market that, you know what, I will give you this money. I don't mind losing it. It's okay. That's the deal, right? So stop losses are not optional. Even when you're really, really, really sure, you do need a stop loss. Let's see. Brittany still have not answered my question. What's what's your question, Brittany? On futures. Okay, still have not answered my question on futures. All right. Got it. Later. All right, got it. Inside joke there.
Eddie, I have a question.
Yeah.
The screen that's displaying now, can you, I guess I'm having a hard time understanding what it says. Cost of the first order is $1,067.65. Cost of second order. Can you explain to me what that means? Does that mean that I'm buying it for $1,000 and then I'm receiving a credit for $1,062?
No.
I don't understand.
Okay. So I think I get where you're going. So when you enter the trade, you are you're spending money, right? How much are you spending is the question. You're spending $1,067. She is referring to the cost of order number 1, including commissions. So forget about commissions for now. Let's concentrate on this number, the 1067. This 1067 comes from the price of the premium, right? Or the value of the premium. The premium is $10.67. And we know that when we're talking about options, one options contract represents 100 shares. So the price is also representing 100 shares. And so we have to multiply that by 100. And that's how we get to the 1067. You with me so far on that?
Yes.
In your in your broker account, you have to have $1,067 and more, right? At least to be able to purchase this contract. That's how much you're spending.
Okay.
It immediately comes out of your brokerage account, whether it's Thinkorswim, Webull, Robinhood, E-Trade, whatever, Fidelity. You have to have that 1,067. That's how much it's costing you, right? That is understood.
Yes.
Order number 2 is where we are selling, right? We're selling one order of SPY. What's happening? I'm getting error messages on my Thinkorswim. All right. Order number 2 is a credit of 1063. Sorry, 1062. Did I do this incorrectly? I'm selling at +3. You're getting a credit of 1063. This math is not adding up.
Okay. I thought it was me because I didn't understand.
Yeah, this math is not adding up.
Okay.
So let's boy, this thing is really wacky today, huh?
That order screen showed all 3 transactions as to open instead of 2
Yep,
to close.
Yep, that order is yeah, that thing's not adding up. That's pretty smooth of you to notice that. I'm impressed. I am so impressed. Yep, this one is correct. So, how do I show you this without telling you everything? All right, I just tried the same thing in my live. It appears my live is good. Live is good. Go ahead and edit that. All right, let's do this one more. All right, these numbers are not correct. So let's fix these numbers, and I'll tell you exactly. The first one is correct. The cost of order number 1 is 1067. The cost of order number 2 should be 1367 credit. These numbers should be 1367.
Okay.
That's what that number should be, and it should be a credit, right? And then the order number 3 should be 967 credit. That's what that should be.
Okay.
So that this dialogue on the paper trading today is way out of work. It's totally out of work, because we're buying at 1067, which is correct. That's the only thing they got right today. And then we're selling at 1367. So this really should be $1,367. That's what I was expecting to see over here. A credit of 1,367. So, okay. And then order number 3 should be $967.
So when this order is executed, that means these 2 credits, the broker is crediting the account right away, or not until the actual sale of the we hit our target?
The latter, until the sale happens. So once you enter the order at 1067, that amount comes out of your account, right? And then once the order closes, you now got 2 positions, two possibilities. It's either going to take order number 2 or order number 3. Hopefully order number 2, which is your take profit. That's the best case scenario.
Okay.
Right? And if that happens, then once you sell, what happens? That amount is immediately credited to your account.
Okay.
Yep.
Thank you.
Yep. And let me also put an asterisk on that immediate here. It depends on your type of account. If you have a cash account, that amount will be available in your account within 2 business days.
Okay.
If you have a margin account, that amount will be available immediately, meaning that you can use that money. It's yours to use right after that. You can get into another transaction. So that's one major distinction between a cash account and a margin account. And there's different reasons for getting one or the other, right? So people with who want to go around the PDT restriction, they might prefer a cash account because they can trade every day without any penalty of being locked out of their accounts. But with a margin account, you can trade every day also, but you have to have at least $25,000 in your account. That is for people in the USA. If you're outside of the USA, those restrictions do not exist, right? Okay. But I should also mention that even if you're outside of the USA and you're using a TOS account, you're still subject to the regulations here in the US. So if you originally, were living here in the US and you moved to, say, I don't know, Europe, you moved to Germany, and you're trading from that US-based account, you are subject to the US regulations, which means that you still have to maintain the 25K. Sounds good?
Yes, thank you.
Sure. Good catch on that. I should have gotten you there. That was Jamise. Is that how I say it, Jamise?
Yes, Jamise.
Jamise, I am elevating you. You now have the title of optionista.
No, but thank you.
All right. I think we've beaten that one to death. Let's do an open now, open mic. I think we've covered a lot of the basics. Let me check to see whether I've got any other fundamental questions. We've picked the strikes. We know what Vega is. We know what Delta. We've done a bracket order. All right. So let's open up open house here.
Eddie,
Who's got? Yep.
going
Yes.
back to the chart, going back to the chart, why did you say it would go down instead of up?
Which symbol were we talking about?
Um,
And you've got two open mics.
And that was SPS.
SPX. Yeah. Okay. So she wants to. Her question is, why do I think we're going down as opposed to going up? That's because we hit this resistance at 41.77, and this candle is actually red, meaning that prices are going down. With SPX, because it represents the whole market, we don't necessarily know for sure. However, we can tell with really good confidence that every time you hit the resistance, you tend to go back down. And I think we did hit that fair and square on Thursday. So this is a downward trend. This is called an inside candle, right? It is overshadowed by the one preceding it. So with that, it could either consolidate or it could break out to the bottom or to the top. This one is most likely to the bottom. That's why I think that it is going to go down. That's just my you know. Of course, Monday could show us different. You know, something could come up. You know, that's very good for the market. You know, they might come up and say, you know what, you guys, we were wrong. We've been talking about inflation. There is no inflation, guys. I don't know who mentioned recession. You know, they actually misspoke. All those good things. You know, these politicians, man. Right? Yeah. Does that answer your question, Deborah?
yes.
Yeah. So in short, I have no clue. Cool. All right, let's see. I've not seen Rashana here in a while. Rashana, how you doing? Cool. All right, guys, if there are no other questions, how do you find me? By the way, you can find me at info at Options with Eddie. Thank you, Kay. Options with Eddie, info at Options with Eddie. That's how you can find me outside of these Saturdays with Eddie session. I live on options. I love options. That is what I teach. I have a results-based curriculum, right? Results-based means that if you're not making money, you ain't doing squat, right? You need to be making money. And so I teach you how to do that using options. I take you from fundamentals all the way to the advanced. I come where you are, basically meeting you at your level. I don't assume that you know everything or that you know everything. We simply work together with what you have. And the idea is that we will cover the fundamentals. I will make sure that you fully understand them. There are some ways that I actually trade or prefer. The reasons I go with those over and over again is because they work, right? Because they work. I have simple goals. I am looking usually to make around 1,000 a week for my students, at least by the third or fourth week. Make sure that you have the tools and you have the capabilities to do that. We do not trade for the first 2 weeks in live. It's always going to be in sim, and then one trade in live and everything else in sim until you're comfortable, strategy by strategy. And you can learn a whole lot more by going to that website that Kay posted there for me. Thank you so much, Kay. Kay is one of my star students. By the way, she's doing very, very well. Thanks, Kay. So, you're most welcome. You're most welcome. So Any questions, by the way, on that program that I can help answer? And when's the next class? Next class is building up. It should be starting either next week or the week after. So I have no more than 10 students per class, and I've got a few classes every week. Once I hit the max, because I teach them live, then I will put other people on hold or just on the waiting list, and that's how it works. There's just me teaching at the moment, so it
I have a
means that
question.
you get my personal attention. What's that, Janice?
So the classes are for beginners, but I think you mentioned having beginners, intermediate, or advanced. When you finish the
Yeah.
beginners, do you go to the advanced, or you pay for the I'm sorry. When you finish the beginners class, do you move to intermediate?
Well, actually, when you join the class, I don't put you in a beginner's class. I put you in a class that is at your level, which means that you're only paying one time. You're not paying two times, right? So if you're advanced, if you already have some options and you want to go through some additional strategies and fundamentals, or whatever it may be, then I will put you in a class that is at your level. You're not paying twice. There's multiple levels, but beginners will always be in a beginner class, and they will eventually be in an advanced class. But that's how it rolls, so that you're all at the same kind of level, right? And you move at the same pace. So the idea for that is so that I can give the proper attention. I'm not talking over your head, or I'm not talking under. I turn it to, or I tune it rather to the students in the class. And again, the class size is no more than 10. So if you decide to join the classes, then obviously you and I will have to meet before that and determine where you are, what your goals are. We're going to build a plan, get you in a class, and go from there.
Okay, thank you.
Does that help? Yeah. So you can come in at any level, basically.
So when is your next class again?
That's what I'm building right now for the next week or the week after. So if you decide today that you want to join, just go ahead and go to that website. There's a link to sign up, and I will contact you so that we can decide which class best fits you.
Okay.
Yep. How often does your class meet throughout the 8 weeks? It is once a week. So once a week for 8 weeks, and that's live via Zoom. And by the way, if you are in my class, we also meet an additional 1 or 2 hours every week on Thursday mornings, where we trade live. Sometimes you're going to watch me trade, or I'm going to watch you trade, whatever the case may be, but we're going to go through that exercise. I think it's important because some people have not traded live. They've just been trading in their sim, and they need to have that experience. So we do that. There's also something else that I call Power Morning. Power Morning. So do I take married couples? Heck yeah, if you're married, that's cool. You're single, that's cool. I know what you mean, Deborah. Yes. We have a special price for couples. Yeah.
Okay.
Hello, Eddie. Eddie?
Yes, Nathan, what's up?
Yes, thank you for the class. It was very interesting. I also looked at your intro to options YouTube video. It's very informative. I was just wondering, can you tell a little bit about yourself? Like how long you've been trading?
Yeah, sure. So I've been trading a long time, about 30 days or so. Just kidding. More than 15 years. Different things. I started trading options in the last 2 or 3 years. Before that, I have been trading almost all, for my entire working life. Started off with CDs, CD ladders. Are you familiar with those?
No.
Or have you heard? All right, CD ladders they used to be the cool way. They still are, maybe not. But they used to be the cool way of investing CDs that are maturing at different intervals. And that's how, those were the instruments before they came up with options. So I've been trading, upwards of, 10, 15 solid years. My options trading, I would say, is a solid 3 years. In my time of trading, I have lost a lot of money. I have made a lot of money. This is what I do every day, so I'm confident with it. I'm confident with the subject, and I have good results. The way I gauge my results is by the success of my students. I want to say 90% of my students make their money back before the 8 weeks are over. Right? So that is my claim to fame, that that my methods are working. I'm also very disciplined in terms of risk management. I am of the opinion that if you know how to make your money, you should also be able to keep that money. And I find that a lot of people, do know how to make the money, but they have a problem with risk management, and that's because it's a psychological thing as well, right? Not because you don't know what you're doing, but it's because that has to do a lot with emotions. My ideal, well, before I go to the ideal, but some other things that I find very, very common with my students or people who come to me is they know some of the fundamentals. They know a lot of the fundamentals, in fact. However, it's putting that whole story together that is many times the problem. Getting all that story. So you know about calls, you know about puts, you know about covered fees, covered calls, covered options, you know about leaps. There's all that information. Verticals, you have gone through so many good courses that teach you all these things. But what you're missing is probably a simple plan. And I like to keep it simple, right? So if we figure out how do we make $100, how do we multiply that, how do we scale that, that's important, right? It's kind of like your job. You figure out that you go to work on Monday morning at 8 o'clock. On Friday, they might even give you a paycheck. Once you discover that, what you do in the next week, you show up at 7:30. Before you know that, you've been there for about 30 years. So the same thing with trading. You've got some disciplines that you need to work on. You also need to be mechanical, meaning that there's a lot of emotions we take out. There's, it has to be purely objective. We take out the subjectivity. It's the math, it's the numbers that help us make the decisions. So we put together a plan. So a little bit, some more about me is, what else can I say? I'm
Were
just your
you one
regular
of the
guy.
Terry's student?
Yep. Been through that. Been there, done that.
Yeah, I'm.
I've even taught there. That's how a lot of people know me from there. So it's she's got a great program going. Nothing bad to say about that. Great friend of mine. I just don't teach there anymore.
So, Mr. Eddie, my question was, you said you teach live on Thursday. Like, are you flexible?
Oh, go ahead. Sorry.
I was gonna ask if you were flexible because on Thursday, when you're teaching, I'm actually at work and I can like access I can do trading, I guess, from the government computer. So like most of my trading, I would do it like Friday because then the next day, Saturday, I don't go to work. So I just wondering if you'll be willing to like, maybe if I decide to join instead of Thursday to work with me on Friday instead. I don't know.
So I don't teach Fridays. So I actually teach Monday through Thursday. The classes are usually at 7:30 p.m. So you're going to be in one of the classes Monday through Thursday, at 7:30 p.m. Eastern time. The Thursday class that I'm referring to is actually not a class. It's a power morning. It's live trading and it's during market hours. You don't have to be there. It's optional, right? It's optional. It is available to the entire alumni of Options with Eddie. Most of the time it is recorded, and that's the other advantage that you get, by the way, as one of my students. You get access to a ton of video content. Over the years, I have accumulated hundreds of videos. So I also share material inside of a Google Drive where you get templates, you get explanations, you get tidbits, you get all sorts of stuff. But yeah, I'm flexible enough. Just talk to me.
Starts
Nathaniel, did I
account.
answer your question?
I'm sorry.
No, I was just asking Nathaniel whether he's comfortable with my profile.
Yes, thank
There we
you.
go.
Thank you, Eddie.
You're welcome. You're welcome.
I heard about you through Terry's program also.
Awesome.
You've got a real positive reputation over here.
I'm happy to hear that. I don't burn any bridges. Even when I left, it was for advancement. You have to move on to the next level. So nothing but good things about Terry. So cool.
All right, thank you.
Mm-hmm. Is it lifetime access to your recorded? Yep. That's a. Do you ever interact with previous classes? What do you mean? Do you ever interact with previous classes? Yes. I want to say yes, resoundingly yes, because once you join the program and you become alumni, you also get to be a member of the groups, the private groups. You're not going to see them on the internet because they're private. So yes, you do become or you do join the private groups. There's a tremendous amount of help. Those guys are awesome. They're very, very active, very vibrant community. So yeah, I don't lose touch with even people that I have coached in the last 2 years. I'm still in touch with them. What size account would I recommend students to have? When you can start with anything really. I will teach you how to make money on $1,000 account. So even if you have a ton of money, I don't want you to use it. But I do recommend that you come in with about $3,000 to $5,000. That is how much is, in my opinion, is reasonable to give you that, $1,000 a week target. You can start to make that target, and you don't need a whole lot more than that. So if that's all you have, $1,000, you're still cool. If you don't have any money just yet, that's okay too, because the first couple of weeks anyway, we're going to be in the sim. So yep. Let's see. Can you start with no knowledge at trading at all? Yes, I do have a few people that we had to go through the dictionary, the Oxford dictionary, and find the word option. Yes, I do have a few people who come in without any sort of knowledge. I'll give you an example. My daughter is 14 and she's now talking options. She had no clue what a stock was, and that was fun, explaining that you could buy some asset that you will never hold in your hands. So yep, cool. Any other questions about that program? I love answering questions about that program. This is my passion. Do I do covered calls with options? I can teach you how to do covered calls. Yes. Yep. Is there any other way to do covered calls, Aaron?
No, I just know of doing that either by shares or by options.
Yeah. You either have to have the shares or the options, right?
Correct.
Yep. So with the shares, you have to have at least 100 of them, and with the options, you have to have at least one contract, preferably a long-term expiration anticipated security, a LEAP, and then you can sell covered calls on that. So, yep, that's something that I also teach. It is covered calls used to be a thing when the market was a little different. I still teach that fundamental, but I don't see many people using it. A lot of the people who use it actually do that inside of their IRA. But as a matter of daily or weekly income, covered calls, you could argue for or against. But short answer for your question, Aaron, yes.
Okay, cool.
Mm-hmm.
I have a question about
Sure.
the state of the market at this time, and verticals. And I think you may have spoken to it before, but I'm gonna ask it anyway. So with things being erratic, so to speak, as they are now, verticals are not as effectively not the right word, but it's not a time to do verticals at this point in such an erratic or possibly downtrending market. Is that correct? So just single leg options are better at this time?
You could, if that's all you know, then yes. However, you can use verticals to your advantage if you know the right kind of verticals. And I'm thinking that the type of verticals you're referring to are credit spreads. Is that right?
I actually, no, just speaking of verticals in general. So I was speaking of verticals in general, and my limited knowledge at this point is that, yes, verticals, depending on which direction you're going in and the type of vertical that you're doing, has its place depending on what's going on with the market or the underlying stock.
Got it, got it. Let me rephrase the question there. You're referring to selling premium using verticals. Is that right?
Yes.
You're selling, yeah. You're either doing a PCS or a CCS. And I think that's what you're referring to. I think I know where you're coming from. Yes, right now this market is kind of risky for credit spreads. Any type of credit spreads, like the simple PCS and the CCS. Because of the volatility. However, there are other types of spreads, more specifically, condos and debit spreads that you can take advantage of very, very, very easily to take advantage of this market. So that's what you need to know, and that's also part of what I teach. In fact, I lean heavily towards those are the kind of spreads that reduce your risk and still give you a good positive expectancy on the outcome.
Okay,
So,
gotcha.
Yeah, so I do have a few strategies that you can take advantage of in this market to where you really don't care whether it's going up or down or sideways. You're making money either way. So yeah, and it's all part of risk management. You have to gauge this type of market or any type of market and then decide which strategy is going to give you the best bang for your buck, or actually just a buck, but also safely, because keyword there is safe, right? You can make money on any strategy. Question is, can you do it safely and still put it in the bank? If the answer is yes, then that's the strategy you need to be employing in this type of market. So we talk about all of that in options with Eddie. So.
Okay. And so a follow-up question to what you just said about how many strategies would you say that a options trader may employ? Like,
so at the last count, I think there were about 147 strategies. Just kidding. Came up with a number.
You're not doing 147. Like on a regular,
yeah, I know.
on a regular basis.
Yep. I think that every options trader should know at least 3, 4, 5 strategies. Right now, do you use them all the time? No. Right? You zero in on a few. And when I said 147, I was actually kidding. I mean, if I click on spread single, are you still seeing my screen, by the way?
Yeah, we can see it.
Yeah. Yeah. So you notice that, just counting down, all these are different strategies. And I don't teach all of these, right? It would take a whole semester, a whole maybe 6 months, 1 year just to teach a lot of these. But look at that. If I go into double diagonals or I go into deep and wide strategies, and all of them, seem to have, a way that you can trade these. There are so many strategies that you can pick, that you can learn, that you can employ for almost any type of market. The question is, should you even consider doing that? Well, this is where it gets very, very advanced. And if you've gone beyond the single and the vertical, and maybe the straddle and the strangle, then you're starting to get into more advanced stuff. So to your question is, are there other strategies that are available to employ? The answer is yes, but I would suggest that you zero in on about 3 to 4 strategies, and I'm talking about simple calls and puts and some verticals and covered and strangles. There's about 4 or 5 that you absolutely need to know. They form the foundation, they form the basis for all those other advanced strategies. Now, to get there, you also need to practice. So don't just learn them if you're not going to use them, because you're going to lose them. So we go through all of that. Hopefully that answered your question there, Jaren.
Yes, it did. Thank you.
Okay. All right.
Eddie, one question is there ever a time where you would recommend rolling an option?
Yep. So you can roll an option. I think I've gone through some examples with some students about how to roll some options. If you paid into the position, I don't suggest that you roll. If you got credit, then yes, you can roll. Sometimes you will come out ahead. Rolling refers to basically changing the DTE to a further expiration or even a closer expiration. Because if you bought 7 DTE and you're in a really good position and you want to roll it forward, right, to make it expire today, you can do that. You can also roll to a vertical position up or down and change the strikes. So there's several ways. It is mostly used as a defensive strategy. Basically, you're lessening the pain, or you're extending, the period of time that you're in the trade, for sure. So I recommend that you weigh the balances. It is not my preferred way for defense, right? If you're in a losing position and you can salvage it, then you should get out if you can. Rolling, I only recommend rolling when you're trying to avert a maximum loss situation. I don't preach maximum loss. Never ever take maximum loss. Don't take maximum loss. I wonder whether I was clear about that. Did I say anything about maximum loss? Don't take max loss. So max loss is, you want to avoid it. It's a very, very painful, especially when you're talking about a credit spread. Then you can save that situation by rolling the trade, and I will show you how to do that as a defensive strategy. Not as your first strategy for defense, but as one of those instances where you enter the trade, you were really confident, and then things have turned around. That happens to the best of us all the time. So short answer there is yes, you can roll, and I'll teach you how to roll, but that shouldn't be your first go-to.
Okay, thanks, Eddie.
Sure. All right, we've got about two more minutes here to 1 o'clock. Two more. So let's see. Any other burning questions we need to answer?
Eddie.
Hey.
Yeah, I just want to tell everyone that I'm one of the students with Eddie, and the class is great. I'm making a lot of money right now. Just to let you guys know.
Awesome. Hey, thank you so much, Tayo. Tayo is one of my star students. He's may I give an average of how much you're making a day?
About 1,500
every day.
Every day.
Yeah. Yep. We get those kind of results. We get them.
Love it.
Not just one student, but a lot more students who are not open to talking in public, and I totally respect that. But these are the results that we get. Not to say that that is common, but I want to say that almost all my students are averaging at least that $100-$300 every day. And remember, the target is only $1,000 a week. You can do more based on the size of your account and based on the strategies that you are using. But that is a perfect example of a student who is making, I don't want to say that it's totally because of me, because he came in with some knowledge, but we worked on plans that he is able to use and also employ risk management such that he can keep what he's making. He's not just making it and blowing it away on the next few trades. He's actually keeping that money. So thanks for that. Thanks for that. Definitely, good recommendation there. So. All right, guys, I will see if there's nothing else. Any other questions there? If you're considering, yep, go to options with Eddie, and at the very top, there's a quick meeting. Schedule 20 minutes for me, figure out is this a good fit, and can we do this? Do you need more information, or ask anybody, and they will let you know. So it is now 1 o'clock my time. Thanks again. Have a great Saturday, everybody.
I'm glad you
Thanks,
mentioned
Eddie.
about
Appreciate it.
Eddie.
Thank you, Eddie.
I wasn't sure if the quick meeting was for like a consultation or to act, or as you just said, to talk about whether someone was a good fit for the program. I think.
Yep, it's to figure out whether we're a good fit, and also if you need more information before you sign up. Most people usually, they have all the information on the website, but in case you're still on the fence, then that's a way for you to figure out, is this for you or not for you?
Okay, thank you.
Yeah.
Thanks, Eddie.
Hey, thank you.
Thank you.
Bye.
All right. See you guys.
Bye-bye.
Bye-bye.